everyone. Today I am going to discuss a matter with you that is probably somewhat confusing to homeowners, and that's the mortgage interest deduction. The mortgage interest deduction reduces your tax liability and in some cases generates a refund for you. The amount of mortgage interest that you pay a year to a lender is reported to you on the Form 1098. This form should be received by you sometime during the month of January or February. On this form, it will show the amount of interest that you paid that lender for that particular property and any points paid that year. In some cases, the Form 1098 will also show property taxes paid, but that's only if your property taxes are being paid out of an escrow account from the lender. So in all cases, the property tax amount is not going to be listed on the 1098, but in some cases it will be. Now, in order to claim the mortgage interest deduction, you must itemize, and that's using the Schedule A. The itemized deductions must equate to more than the standard deductions in order for you to claim the mortgage interest deduction. Now, there are two types of debt that the mortgage interest deduction applies to. There's the home acquisition debt, and then there's the home equity debt. The home acquisition debt is a loan that you have taken out for the purchase or the construction of a home. The home equity debt is a loan that you have taken out that is not relating to the purchase of a home or substantial improvements to a home. An example of a home acquisition debt is your general mortgage. You go to the bank, you go to the lender, you want to apply for a loan so that you can purchase a home. That is considered home acquisition debt. Home equity debt, that is a loan that you have taken out against your property's equity for whatever reason. It could be you wanted to take a vacation, you wanted to pay off credit card debt, you wanted to throw it in the middle of the street or give it away. That is an example of a home equity debt. Now, please note that there are limitations on the maximum amount of interest that can be claimed with both types of debt. And please note that you can only take the mortgage interest deduction on your first and second homes. If you have more than 2 homes, then okay, you cannot take the deduction, the mortgage interest deduction for those additional homes. The limitation is 2 homes, the first and second home. And for the home acquisition debt, the maximum amount of mortgage interest that you can claim is $1 million if you're filing married filing jointly. If you're filing separately, it's only $500,000. In regards to the home equity debt, the maximum amount is $100,000 if you're filing jointly, or $50,000 if you're filing separately. Now, in order to take the mortgage interest deduction, you must itemize your deductions, and the itemized deductions must equate to more than the standard deductions. And you would use the form Schedule A to itemize deductions. Also, for more information regarding the mortgage interest deduction, you can refer to the IRS publication 936. In this publication, you should find all the information that you need to know in regards to the mortgage interest deduction. And another thing that has been cropping up lately is the question that people are asking in regards to multiple people claiming the mortgage interest deduction for one property. Well, this is legal and this is possible, but you do have to meet requirements to do that. Per the Treasury section, regulation section 1.163-1B, a taxpayer is permitted to take or to claim the mortgage interest deduction, providing that he or she is considered a legal or equitable owner of the property, and that he or she has paid the mortgage on the property. This does not mean you have to pay the entire mortgage. You can pay 50% of it. You can pay 30% of it. Whatever the percentage is, you are allowed to claim that deduction, providing that you are considered a legal and equitable owner of that property, meaning that your name is on the title, it's on the deed, it's on the mortgage. In some cases, your name is not going to be on the mortgage, which means that when the Form 1098 comes, it's only going to be in the name of the person whose name is on the mortgage. And that's okay. If you are paying part of the mortgage and your name is on the deed or title or some other legal document which makes you a legal or equitable owner, you are able to qualify to take a portion of that mortgage deduction. Now, typically, you take if it's two people, they usually do it 50-50. But technically, if one person is only paying 30% of the mortgage and one person is paying 70% of the mortgage, then the person paying 70% of the mortgage gets to claim 70% of the mortgage interest deduction, and same for the 30%. But again, it's up to the parties to decide how you want to divvy up the mortgage interest deduction. As for showing this to the IRS, if there is a 1098 that has another person's name on it, but you're claiming part of that mortgage interest deduction. What you do is you copy that 1098 and you send that in to the IRS with your 1040, letting them know that you have paid part of that mortgage interest. So you would claim whatever portion of that mortgage interest that you paid on the Schedule A, but you will also attach the Form 1098 that's showing the other person's name and write a little statement indicating that you've paid a certain portion of that mortgage. So this generally gives you a brief overview of claiming the mortgage interest deduction. And again, you can refer to publication 936 for more information. And there are also a number of IRS topics that you can refer to relating to the mortgage interest deduction. Before I conclude this video, I want to mention that if you have any other tax questions, please refer to Googling tax.appeal.168. That's tax.appeal.168. If you Google that, you will find links to various questions that I have answered for individuals regarding various tax matters and some real estate matters. I also have a tax website that you might find helpful. On that website, I have recorded over 88 different downloads referring to different tax topics. And if you click the tax trivia link on my website, you will find some interesting reading about the history of our tax system and the Federal Reserve System. So this concludes, well, not quite, because you know what? I didn't give you the website address. That might help. My website address is www.audiotaxhelp.com. That's www.audiotaxhelp.com. So now that I've given you my website address, this concludes my discussion on mortgage interest. I do hope that you have found the information to be beneficial to you, and I do hope that you have referred to my other tax videos. I record them because my goal is to help you make your life a little less taxing.